American banks are failing, and that is a scary thought for most Indian investors as well. But I don't think there is much to worry. Our regulatory supervision, the health of Indian banks, and then there are ways and means you can actually spread your risk, de-risk yourself from any such failure here.
Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, the global banking crisis is making headlines everywhere. First the Silicon Valley Bank, then Signature Bank, and more recently Credit Suisse. So what really is happening? Why is it happening? Are we heading for trouble? Should you be worried? And more importantly, is our money in Indian banks safe? We'll talk about all of that and much more in today's episode. Don't go anywhere.
Banks fail for a variety of reasons, but primarily it is lack of confidence. When people are fearful that their money lying there is not safe, and one day they will turn up and the bank will not be in a position to pay it. Apprehension about a bank for this reason comes in many forms, which is, either the bank has very poor quality assets, because bank is in the business of taking depositors' money and lending it to people at higher rate. If people think that, if it gets reported that, they are not reporting good enough, it could be apprehension about that, asset quality, and lack of confidence leads to a run on bank. It can snowball into a catastrophe because a variety of reasons. One is that the American economy or the banks or the depositors or the borrowers have been used to very low interest rate for 30 years, and it has started going up, the interest rate is going up and going up very rapidly. So the realignment or reconciling with this might be harder. Then in the 30 years of your 3 decades of low interest rates or virtually no interest rates, free money, that has caused a misbehavior or a pattern of misbehavior. People lending money without rigorous credit evaluation, or investing in government security, investing in treasury bills which were low yielding, and because interest rate has gone up, their value has come down. It's very understandable, natural for depositors to get apprehensive about these banks' financial stability. And once a bank faces a lack of confidence, people run, and if there is a run on the bank, that itself becomes a reason for the bank failure. So this can well snowball into other banks entirely because of a run on the bank, even though they may not be financially unstable. But looking at they just might be perceived risky. Some people might be apprehensive about it, and that can lead to disruption in the financial system there. In this world now, things are so connected that if there is a recession, if small businesses stop getting money, if many banks fail in America, then many of our technology companies will struggle for their business. They will find absence of consumers, absence of business. If those businesses scale down, they are unlikely to be consumer for our technology services, the call centers, and so on and so forth, or consumption led economies. That's a connection we have, and if people don't make money there, they will not be investing here. So now in a connected world, people are investors, people are consumers, people are providing, outsourcing their services. If you look at Sensex, 35% of the Sensex is service export led. So it has that connectedness, though our real economy may not be impacted in that way, but these are the fallouts. Largely the depositors' money in Indian bank is relatively safe because we have 3-4 big private sector banks, and we have large number of public sector banks. I would look at public sector banks as a quasi-sovereign. None of those banks have ever failed. They have done poorly. Government has gone about recapitalizing them. Some of these big public sector banks, your deposit there, I'm not very apprehensive. The other big private banks, the Axis, ICICI, HDFC, I'm not very apprehensive about them because they are very well capitalized. Also, I don't find that scale of reckless lending by these banks. and we haven't seen the kind of change of complexion of the interest rates and the borrowers' habits here. Far more intense regulatory supervision. RBI is extremely active, very proactive with this, but still there could be a segment of Indian banking which could be relatively unsafe, and one should be a little cautious about it. But substantial part of Indian banking system, which is the public sector bank and the big private sector banks, I find them to be reasonably safe. The takeaway for depositors is very straightforward. Try and de-risk yourself. Indian banks will not fail, but just in case they fail, how you should be geared for that. You should have a plan so that you are never that vulnerable. You should not be subject to somebody left in the lurch if a bank collapses. With that in mind, I think make sure that if you have more than 5 lakh rupees of deposit, spread it in multiple banks. Maybe if you have substantial amount of money, good amount of money should be in public sector bank, and that is one step. And spreading it in multiple banks with 5 lakh and more. Then there is another thing, you can buy RBI bonds and buy it from RBI directly. In India, the depositors have been enabled this thing, and then when you buy a mutual fund, when you invest in a liquid fund, your money is de-risked on two fronts. One is that your money is invested in corporate bonds or government bonds, and it is very diverse. When you invest, say, 1 lakh of rupees in a debt fund, then 5 rupee might be in one company's bonds, another 5 rupee in another company's bond, maybe 25 rupee will be in government bonds, so on and so forth. It will be spread over 5, 10, 15, 20, 50 companies. So assuming one company fails or one bank fails, that will affect in a very limited way. So the benefit of diversification is significant, and spreading your own deposits over multiple banks is another way. And this is, I am suggesting, which is an overcautious thought if it comes to your mind.
Well, with that, it's a wrap on today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.